Hello, ladies and gentlemen. I want to welcome you for this panel here in the Capital Club. I have a VC here in the DIFC. We're investing in early stage companies and also emergency markets, most likely here GCC, MENA region, but also like Southeast Asia. We are having an exclusive partnership with Alibaba here for Web3 investments in the MENA region. So we're very much into the topic of tokenization.
Hi guys. My name is Berwin Tanco. I'm the founder and CEO of Ectochain, layer one blockchain, and also Entire Land. We focus on fractionalizing real estate management rights, and also we focus on putting real world assets on chain.
Hello everyone, it's good to be with you guys here. I'm Rodrigo Barakat, a partner at Helion Ventures in Dubai, based in the Dubai FC. I do some venture capital investment and in emerging markets. We're focused in pre-seed, seed stage. Oliver might have spoken a little bit about it. And I'm originally from Brazil. Been working in crypto and blockchain space for 9 years now, doing a lot of advisory for regulatory agencies, central banks, and doing some institutional level consulting and special projects too. And happy to be on this boat with not only Oliver, but all of our other partners trying to lead the industry to what we believe is the next level, which is onboarding this trillions of dollars worth of assets into this new infrastructure. Excited about this conversation. Thanks, Oliver, for hosting us.
So thank you so much.
My name is Peter Wielgosz. I'm a partner at a U.S. law firm that has an office in the DIFC, Rimon Law. It's a Silicon Valley-based firm that looks at the entire value chain of startup ecosystems. And we act for both the entrepreneurs and for investors into that space. Everything from the incorporation of the companies, shareholder agreements, registration of intellectual property, all the way up to your Series A, Series B, and so on until final exit. And then we also do planning for and estate management for the entrepreneurs on exit. In Dubai, I'm heading up the crypto blockchain fintech practice. I've been in the industry for 15 years. Have clients both in the region, particularly a lot more recently since the VARA regulations have come out, but also globally. We do everything from DAO establishments, some tokenization projects, ICOs, IEOs, these are token issuances, and then on a corporate level as well, getting the projects ready for investment. We also act for family offices and investors into this industry. Excited to be here and talk about tokenization with all of you.
Yeah, I'm the regional director at Hex Trust MENA. We are an institutional virtual asset custodian. Here in Dubai, we're regulated by VARA, and we hold an MVP operational license, which means that we can, and we are already operating in the region. Our headquarters is based in Hong Kong, where we are as well regulated, as well in Singapore. We are obtaining a license in Bahamas, and we have offices as well in Milan, Italy, where we're gonna get, hopefully soon, regulated according to MiCA regulation. Happy to discuss with you about real-world assets tokenization.
I'm the CEO and founder of TOKO. Unlike Peter, I'm a recovered lawyer. I founded TOKO within global law firm DLA Piper. What we believe at TOKO is really around challenging the status quo. We're looking to leverage this technology to tokenize real-world assets, to democratize finance, and to create greater participation and value creation. We are doing this in a way that does not leave people behind and doesn't cause damage. And this is really important, I think, in an industry that has suffered through a lot of bad actors, particularly in the crypto space. We are, like Filippo and Hex, we're also VARA regulated as broker dealer and exchange operator. Really looking forward to the discussion.
Peter, in a world of law, how you would define tokenization of real-world assets from a legal perspective?
To be honest, I don't know if there is an actual official legal definition. The way I look at tokenized assets is actually from a technical point of view. So a real world asset as opposed to a digital asset, which is a representation, if you like, of a real world asset, is some sort of tangible asset. But it could also be an intangible, because I think you'd be able to use intellectual property as well. So these are assets that have an existing body of law that governs them, that's been, let's say, tried and tested for a period of years. The tokenization element, or the digitization of these assets, is then a representation of certain rights, not necessarily all of the rights, ideally in that asset. But it doesn't necessarily need to be in that asset. It could be in a contract against the owner of that asset. So the tokenization really is just some sort of digital representation of rights that is on the blockchain in relation to an underlying asset.
What can be tokenized? I mean, we had now a very theoretical answer to my question, but for the audience, what are the things or assets what can be tokenized?
Yeah, thank you for the question, absolutely. So when I think about real world assets tokenization, I think about mainly currencies, mostly US dollar. I think about real estate, I think about equities, I think about securities. I think for the real estate bit, Scott is going to explain us about it. I just want to make an example that is interesting about what is the most tokenized real world asset, which is the US dollar. And it is very interesting. Probably you know already about stable coins. There are two big companies out there. One is Circle and the other one is Tether. And they actually mint, so they issue tokens that are backed by US dollar. But I would like to give you a bit of a color on how this process works, simply because it's very interesting and it's regulated. Let's take, for example, Circle. It's an American-based company. It's based on a regulated entity, which is a money market fund, SEC regulated, that essentially stores short-dated T-bills, US Treasury overnight repo, and US dollar in order to create a reserve to issue USDC. So from a practical standpoint, assuming that I want to obtain one USDC from Circle, what do? I send $1 US to Circle. Circle is going to increase its reserve that is kept within this money market fund, and it's going to issue one USDC token. Of course, once I use the USDC token and I want to go back to fiat, I'm going to do the inverse process. So you're going to ask yourself, why would you tokenize a USD token? What is it for? Why? Well, right now there are two financial rails in existence. One is the conventional finance rails, and one is the Web3. And if you want to get access to the Web3 financial rails, you want a token that you can use within these financial rails. And there are multiple advantages that you have when using a USDC token. The first advantage is that you don't need an intermediary, you don't need a bank account. At any given time, I can open right now, for example, a custodial or non-custodial wallet in a matter of 5 minutes, and I will be able to receive a USDC token. This means that I don't need to go and open a bank account. And this is a very big advantage, for example, for the unbanked. The second advantage is that it's a system that is working 24/7. There are no opening hours in blockchain. So I can do a transaction now, I can do it at midnight, I can do it during Ramadan, on Christmas. There are no limitations. Another interesting concept is no geographical boundaries. I can transact value in every country in this world, simply because I'm sending from one wallet address to another wallet address, one USDC. And this is very interesting. And last, if we compare a transaction between a USDC and a SWIFT payment for an international transaction, you will see that right now, for example, the cost for transacting USDC is about $1 US for a transaction every given amount. If you operate a SWIFT payment, it's going to take between $25 and $50 US, and the time is very long. On the blockchain, it happens in a matter of minutes.
The market of RWAs, how we say, real world assets, has a huge potential in growing. So 2020 we were by 0.31 trillion US dollar on value. And now I have to read, there are so many zeros behind. So in 2030, there's supposed to be 16.1 trillion US dollar market cap. So that's a huge market. My question would go now to Rodrigo. Rodrigo, how you would define the world economy or the market of real world assets in the future and the different, let's say, hotspots of real world assets?
When we look at real world assets, I tend to look at the portable assets that are readily available in the market, that all of its configurations and the way they are already structured in traditional markets are easily portable to a new infrastructure to make it frictionless and to actually promote fractionalization or to facilitate the access for global investors into other markets. And after that initial stage, I think we're going to be looking at the generation of new classes of assets, because the digital assets can allow for new classes of assets to arise, especially when it comes to real world assets. But I think that when I look at the potential for real world assets right now in the world, like if you consider like 5% of the real world assets that can be immediately, like let's say, transformed or transported into a Web3 infrastructure, we're talking about trillions of dollars. And as for myself individually, I've been working with the industry for 9 years, like I said, and when I remember back in the ICO days when we saw all the crash happening and all this, let's say, lack of due diligence, lack of compatibility with compliance standards that the real world demands and let's say requires. I was expecting STOs, security token offerings, and real world assets to be on chain back in 2018 and 19, right? But of course, human nature pushes us to more, let's say, adventurous pathways, and we still watched the DeFi summer, the NFT frenzy, and we're still watching some speculative cycles happening before we actually see the industry mature and more experienced, let's say, professionals to jump into the industry to help that transition happening. Real world assets that are like readily available to report and portable to Web3 infrastructure are like generally government bonds, equities, like real estate, and more like luxury goods that can benefit from fractionalization.
If we see to the market, the current, let's say, only real estate market for tokenization is around 330 trillion worldwide, so it's a huge market. But I would like to hear a bit more about, we have two startups here. One is with Scott, TOKO, the other one is Acta with Berwin. And I would like to hear from them a bit about their challenges in some bit, let's say, a compact way about how you choose the place of regulation, what was the issue or what was the main issues where they were focusing. Yeah, so what was the troublemakers and what was the good part on it, yeah. And when you decided to go in the structure, what you have a bit. So maybe we start with Berwin about it. So maybe you can just tell a bit about how your journey started and ended, finally in setting up Acta and launching it.
Yeah, so my background is actually in real estate. I've been a real estate and property developer for the last 23 years. The reason why I entered into crypto and blockchain was because of the pandemic. As you all know, 3 years ago, the world shut down, and a lot of my hotels and property development projects had to slow down and basically grind to a halt. And so I had a lot of time to really try to think about all the problems we have in the industry. I mean, one big problem we have is real estate is highly illiquid. Number two, it's really difficult to purchase a property if you don't get a mortgage, if you're starting out in the property market. You're tied down to your location, and it's a long and tedious process to do everything, and there's a lot of red tape. So by starting our layer 1 blockchain and learning about the industry, reading 200 white papers, I realized how amazing and how we can actually solve all these problems by through blockchain. So from becoming a highly illiquid asset through fractionalization, we can actually make it more liquid. Where our startup is really focusing on fractionalizing real estate. And so a lot of people that couldn't afford it before, for as low as $100, they can get into the market because normally it's a tedious process, and you're stuck to your location. Because of blockchain, you become a global player. And from long closing times, because everything's on chain already, we've done all the due diligence prior to putting the property on chain. We can close a sale within minutes instead of months.
From a Dubai point of view, let's say, so what you can say a bit about regulations here, how does this work, and also your experience about setting up a company here in Dubai, in MENA region, with this topic.
Sure, thank you. So if I go back to when I started TOKO while a partner inside of global law firm DLA Piper, and I think to Peter's point, what can be tokenized? Anything. Any bundle of rights can be represented in a digital token. And the way we mint assets, they're very data-rich assets where we hash contracts, we embed information, we have data fields, we use technology to actually enrich and put lots of information into the tokens. And again, one of the reasons for this is, as we talk about that liquidity is one of the barriers to liquidity is asymmetric information. The issuers know, the investors don't know. How do they find out? They spend a lot of money on lawyers setting up data rooms. How about we put the data room into the token so it's there and it's available to everyone? So that was the kind of, I guess, the origins of us trying to create a better tokenization platform. In terms of jurisdictional issues, and I think Rodrigo made an observation about the STO market not taking off as quickly as expected. The reason for that, in my view, is regulatory headwinds. We didn't have adequate regulatory regimes that supported virtual assets. And we had a lot going on with crypto trying to be unregulated. Now regulators coming in and deciding that isn't the case. They probably are regulated assets and always should have been. So again, we started from the outset of saying, well, let's presume the types of real world asset tokens that we're talking about are without doubt going to be regulated. Whether you call them a security or a commodity or something else, different regions, different countries have different laws, but without doubt, these are going to be regulated assets. And I think what we're now seeing is even the most, clear cut of, ETH is now even being challenged as probably a security under the SEC interpretation in the US. So we're seeing a move towards regulation. We always presumed regulation would come. I was sitting in Hong Kong. I founded the business in Hong Kong, part of a global law firm. So we've had the opportunity to work on, crypto tokenization projects on a global basis. I've had the opportunity to work with regulators in multiple jurisdictions around the world. We knew somewhere would pivot and realize what was needed was a framework to actually support the digitization and tokenization of real world assets. I'd spent time actually in this region 4 or 5 years ago. I was at the first FinTech conference in Abu Dhabi in 2019 with TOKO, and we thought that might have been it, but it hasn't been so far. And again, we haven't seen it take off. And again, to my mind, we haven't had an adequate regulatory framework. Last year, VARA appeared, a newly formed entity within DWTC. I was part of the advisory team, so we were invited by VARA along with DLA and TOKO and some other advisors to help with the writing of that law. So we were privileged enough to be in there and supporting the development of this new framework. I think this is going to be a very, very interesting time for Dubai with its ambitions in terms of growth, with its ambitions to pivot from, the young country that it is to being a global financial centre. Because what it now has is a framework that defines all virtual assets as being virtual assets under law number 4. All of them, all activities associated with that are regulated. There's one regulator, there's one set of rules, and they're pretty clear. Now, that doesn't sound like much, but it's the only place on earth that you can currently say that about, and I think that's a really exciting opportunity. I always said I'd never live in Dubai. Now I am, and the reason is because of the VARA framework. And so that sort of regulatory journey and how we ended up here, and obviously we've been supported by the regulators to bring the business in here, has been an important part of that journey.
From let's say a money laundering perspective, KYC, AML, how do you see this VARA regulation here in Dubai? Or what was the reason for Hex Trust to say, okay, we see here a potential market and we would like to come here?
Yes, absolutely. And thank you for the question. Well, as custodians, I could say we're acting as gatekeepers between traditional finance and the digital asset world. So what among our services we provide on and off ramp. So we receive fiat from clients, and then we convert as broker-dealers, licensed broker-dealers, into virtual assets that we provide custody for. And AML and KYC is obviously a key component. So obviously, regulation in VARA is following FATF guidelines. So this is very clear. So we are operating in a fully compliant manner. What is bringing more complexity to the game is the new regulation and guidelines provided by FATF in terms of travel rule and also about CARF. So travel rule is a system that will require all VASPs to communicate to other VASPs originator name, so the name of the owner of a certain virtual asset account, address, and other sets of information depending on how the jurisdiction has to comply with the FATF recommendation. And this is going to be rather complex because it's going to bring in data protection and data privacy complexity, because we operate many transactions per day, as you can assume, and together with such transaction, we have to send to other VASPs, other regulated or sometimes non-regulated operators, confidential information, and this is complex to deal with. And a few words about CARF. You may be familiar with a concept called CRS, Common Reporting Standard. So the OECD pushed the CRS, and now banking secrecy does not exist anymore, and there is an automatic exchange of information of financial account. Well, the news, I don't know if it's good news, is that virtual assets would fall under this type of regulation, meaning as a regulated custodian, once per year will be required to send the information of any given corporation or UBO to the jurisdiction of tax residency of the person or the client. This means that the system will be completely transparent from a tax perspective.
I actually come from the US, where regulation around virtual assets is basically non-existent. And so I'm actually coming here to work on my startup in exactly this real world tokenization. And I think the VAR regulation, is super straightforward and gives a lot of guidance that other countries are not currently providing. It's really exciting. It's a really exciting place to be in that sense, especially, compared to the US, where it's challenging. It's challenging. We've spent 3.5 years to build our company in a compliance way in the US, and coming here, we can do it in a couple of weeks.
I'm really excited for the VAR regulations to come through. I mean, I know there's a lot of work to be done, but I think it's helping everyone kind of come together in unison, because it has been like the Wild West for the last few years. And although there's a lot of teething problems, there's a lot of mistakes that are going to be made, but that's the startup culture. We all make mistakes to learn. And I think the only way we're going to be able to learn is to learn together and hopefully quickly and get everything kind of together as soon as possible. And it seems like the rest of the world will end up following suit from us.
Concerns about security and regulations, and let's say from where you would see the risks associated to tokenization in general?
Okay, fascinating question. So
it's a lawyer question. We talk about risk.
yeah,
Sorry, you're not a banker, yeah? So,
well, there are legal risks.
yes.
So when I started the practice in Dubai, one of my very first clients was a musician, and she had heard about NFTs and wanted to do something NFT, something music was the instruction. Okay, so we started brainstorming. I've been in the industry for a while, so we started looking at, what is it that we could maybe wrap inside this NFT. And she wanted to have the rights of songs to be wrapped inside an NFT. And we started kind of doing the analysis for that. Okay, so you have the right to a song. Does that give you the right to the income that's generated by that song, for example, every time it's played? And if so, how do you go about collecting that? Because that's actually the real challenge, and this is where I'm going with this, is so you have a digital representation of some bundle of rights relating to an asset in the real world, okay? Now what? That asset could be revenue generating, or maybe you want to make it revenue generating. How do you go about collecting that if it's coming in a fiat or in crypto? How do you deal with very rapid transfers of those rights to other individuals? So in the property sector, everyone's thinking, okay, well, that's tokenized property. And in Dubai, that's a very big hot topic because, of course, there are a lot of property developers and a lot of people that made money on speculating on property. But the title to your property is registered in Dubai, Dubai Lands Department, and currently they have increased it from 4, used to be only 4. Now there are only 8 official owners of that property that are registered on the title deed. So if you're fractionalizing your property and that token that represents the bundle of rights in that property is trading many times a day around the world, how does the registry keep track of all of those changes? So, there have been lots of clever legal solutions that have happened. Well, what if we have a company that owns it and then we just tokenize the shares of that company? So on the registry, it's always going to be the same person. Okay, the registrar wants to know who the UBO is, the ultimate beneficial owner of that property. And that's what's really being traded. So how do we capture that? Or alternatively, let's push the Dubai Lands Department away. And what we'll do is we'll tokenize the contract for an off-plan property. It's not registered, why not? So I've heard of NFTs that represent some square meter somewhere within that property. You don't necessarily know which square meter it represents, but it represents square meter of that property. And you can trade that. And then the minute that property then is developed and it moves from off-plan to on-plan, everything's wound up. Token holders are paid out, and the property's registered in the name of whoever it is that would collect all of the responsible tokens in order to register that property. But what I'm trying to outline here in terms of risks is the dynamic that we still haven't solved yet for the interaction between the legacy systems that we have and the new system. The new system is rapid, it's fast, it's around the world, it's fractional. The old system isn't. Sometimes it's paper-based. And we still have to find a way to make that bridge. And I'd love to hear how TOKO has been solving that problem, because I'm sure that's something you've been asked quite a lot by your clients. But that for me has always been the challenge, is when we try to solve these problems, okay, so it represents a real world asset. Does it? And could we actually get the full value that asset would generate for us if we were to hold the real world asset rather than the tokenized version of it?
Actually, what kind of role play smart contracts in this securitization of tokens?
So it's probably a question more for the developers in the room, if there are any, but the way I see it is a smart contract is not really a legal contract so much as code. So it's a wrapper, if you like, a digital wrapper for digital rights. So you'll have a bundle of rights that are digitized, or whether that is a scan of the title deed or whatever, a contract, a song, a painting, a JPEG, whatever it is that the underlying asset is then wrapped inside this digital wrapper, which is a smart contract. It's unfortunately misleading because it gives the impression that it's a legal contract, but it's the digital wrapper that then becomes traded. An NFT effectively is a smart contract.
Smart contracts are really an area that I'm very excited about, and to date they aren't very smart. My background, I was a computer science graduate turned contracts lawyer. The smart contract is literally the confluence of those two disciplines. And I always wrote contracts like a coder, a lot of if-then statements, because I learned to code first, and that's actually a really important part of how we're going to create effective smart contracts. One of the challenges with making smart contracts smart is the need for external data fields, the data feeds that are trusted, because these if-then statements need to if what, and that data needs to come in from somewhere. And so in the context of TOKO, we're already using smart contracts to control. I mean, are they a legal contract or not? I won't go there. Jurisdictions have held them up as being valid from an enforceability point of view. But the way we're using smart contracts within assets, real-world assets that we're minting in TOKO, is to control certain features and functions. So I had a call this afternoon with a client in Hong Kong who wants to do a tokenized fund, and they were concerned about the fund interests being transferred to bad actors or retail participants that they don't want this product to be available to. We said, no problem, within our smart contract, we have a rule set. You cannot move a TOKO minted a token into a wallet unless that wallet is on a whitelist. That whitelist will have AML KYC verification and also things like accredited investor verification. So it's a very simple example, but the way the smart contract is used to stop the problems that exist in TradFi today. And what's really interesting in our conversations with regulators, there is without doubt that friction between the TradFi and the new industries and how they mesh together, and we're seeing lots of examples of that. But what the regulatory dialogue we're having, and Bar is a great example of it, but we're working with regulators across Europe, UK, Asia, and the US, is they're beginning to realise that some of the most problematic areas that exist in traditional finance, because it's all paper-based, is they don't know what's happening with side deals, side contracts, everything else. You put these things on chain, everyone can see it. These are public blockchains. Anyone who understands how to use a block explorer can see things happening. So actually the smart contract is a way of ensuring compliance, getting a bit more creative. And again, I'll use the example of the call I had this afternoon with the fund manager in Hong Kong. They were wanting to know, how do I use this to make things more efficient? I said, well, we can do on-chain verification of calculations and automatic distributions of revenues, dividends, whatever it might be. So you can do real-time distribution of dividends. You can use it for on-chain voting so that you actually have a dialogue with token holders in a way that means it does away with a lot of inefficiencies today. And I think this is where the smart contract is going to cause a fair bit of disintermediation of traditional finance activities. The transfer agent is another example. So we're working on a fund deal out of Luxembourg at the moment, and Luxembourg law says you have to have a transfer agent, somewhere to keep a record of who owns what at any moment in time. Well, guess what the blockchain does? It has a real-time, immutable, auditable record of who owns what at any moment in time. But the law at the moment says, well, you're going to have to take the data off that wonderful system that does work and put it through 30-year-old legacy systems involving human error and manual handling and 3-day settlement times. And these are the frictions that exist as we kind of merge and transition. But these are the problems, and the smart contract functionality is going to bring a lot of efficiency around that.
We have a lot of retail customers sitting here in the audience. So how you would sell to these people the advantage of tokenization of real-world assets?
Yeah, so I'll take the case from the business I'm doing. So I'm in the business of fractionalizing real estate management rights. So for a lot of retail investors, especially the crypto curious or the people on Web 2 that wants to get into Web 3 but don't want to get into the risky, stock market investing because it's very volatile, or investing in crypto because they're afraid their investment might go to zero. I have an alternative investment which is tied to an asset which is quite stable and increases in value every year. It's property. The issue here is a lot of retail investors can't afford an entire home, so we take it to the next level where we fractionalize, and buyers can purchase a fractional NFT for as low as $100. And this opens like a whole new market for a lot of retail investors, especially the small ones. And all of a sudden, we have a global reach. Instead of purchasing just in your country, you can basically have a whole like range of property portfolio that you can invest in fractions all over the world. The great thing as well with what we do is normally when you purchase a home, it costs you a lot of money to do due diligence, hire a lawyer, and do all of that. But what we do is we've done all of that, so buyers have zero fees. So for retail investors, it's really frictionless. It's really faster, easier, and more accessible for them, and also pretty much less risky and less volatile for them. So this is the new trend. We're gaining a lot of traction right now. I think in a couple of years we're just going to J-curve, and there's going to be a lot of retail investors getting into this space.
We're at the very early stages of tokenization of real-world assets, and so the question of are we going to see liquidity premiums, or are we going to see tokenization premiums is difficult. I think the promise is there, but I do want to share some examples of projects, including some we've been involved in. People may be aware of the St. Regis Aspen project. So it's a chalet, a resort in Aspen in Colorado. It was one of the first security tokenized real estate projects that was done probably about 4 years ago now, actually. So we've got a little bit of history here. And it was originally done with traditional investment, paper-based, and also some of it, about 20% of the project, was done in a tokenized form. Originally, there were 13 investors who bought the tokenized part of that project. What we've seen is that the tokenized portion of that project has been consistently trading at a premium to the values. Same property, same rights, but because it's been in this digital form, because it's able to have been fractionalized and sold down, so the original 13 are now 750 odd investors, so it's been broken up and sold on the Templum exchange. And consistently that project, the digital part, is trading at a 20% premium to the paper-based part, so much so that St. Regis is now actually going to start tokenizing the rest of it. Now, your question, are we going to see tokenization creating a liquidity premium? I think that's a great real-world example of the world seems to say yes.
Yeah, I mean, it's also a big opportunity or possibility for people who are more or less excluded from the segment, to invest in the segment, to create and to protect their values.
And just on that, if I may, there's two sides to this. I know a lot of people are talking about the investor side of this conversation. One of the things that we like to work with clients is actually on the other side of this, the lender side of it. So we're working with clients, including Quarter Homes here in the room, to bring an alternate home financing solution, because a lot of people can't afford to buy homes. Global housing affordability is a crisis issue and getting worse in many countries around the world. And so the use of this technology to actually solve a real world problem, which is home ownership and affordability of homes, is another piece where you can provide alternative financing solutions using this technology to put people in homes while giving people on the investor side access to an investment in property in an owner-occupied solution that they've perhaps never seen before.
As a custodian, I wanted to ask a question.
Please go ahead. I want to introduce,
I tried to explain earlier, but if the concept of legal and technological segregation and the difference of having a wallet on chain and having your savings in a bank. So are you aware what is the difference? Because it's very important to understand what means keeping your savings within a bank and what means keeping your savings on chain, which are fully legally segregated and technologically segregated. So I've witnessed myself, I'm relatively young, different banks collapsing. Small regional banks, American banks. I've been working for a long time for a Swiss company. When I saw what happened was Credit Suisse, I was literally shocked.
Yeah.
So what is interesting within the blockchain technology, I think, is that assuming you own a Bitcoin and you own your wallet address, so you have a wallet and you have a public address and a private key, that funds is your forever. That funds are not sitting on the balance sheet of a bank, and you're not looked as a liability from the bank perspective. So that money or that value is yours forever. And this is a very important concept to pass, because I believe obviously there is trust in financial institutions because they are regulated, but we all are seeing what is happening in the last years.
So I have a question regarding the real estate space. So I'll try to make it as short as possible. For somebody who is already investing in real estate, who may want to, again, fractionalize ownership of properties around the world, how would you answer to the question, why wouldn't I just then invest in shares in a rate that is regulated by the SEC?
Yeah, well, I get asked that question a lot, including by the global real estate team in the law firm where I was working. And they said, we've already got this, we've got REITs. I don't hear anybody talking about their REIT as if they feel it, as if they're truly invested in it. It's a passive part of maybe somebody's retirement investment, but it isn't generally something that people participate in a really direct way. Now, for all of its challenges and problems in the crypto market, I think what we've seen with crypto is an absolute desire for people to participate, to buy, to own, and to have. And there's almost tribalism associated with things like cryptocurrencies. Now, to me, as we move in, and we saw it the same with NFTs, as we start to moving into fractionalization of real estate through tokens, people are going to actually be able to connect. I was based in Hong Kong for the last 11 years, and I've been talking about this for 4 years. Who in Hong Kong wants to buy an IFC coin? The IFC is the International Financial Centre, biggest building on Hong Kong Island. Nobody in Hong Kong says no to that. Yes, I'd like to have a piece of that iconic building and have exposure to its capital appreciation and its income streams from rental. You can't do that with a REIT. A REIT is a bundled portfolio. It's a wrapper. And this is the difference, I think, with tokenization. When I started this journey, people would say, we have securitization. I said, this is the opposite. This isn't about wrapping. This is about getting directional. The technologies are going to allow us to directly invest in what we want rather than what some fund manager tells me is buried in this thing. And that to me is the difference.
My personal opinion is that what's happened in the world, we excluded too many people of the real economy. It doesn't matter if this is Africa, Asia, or wherever, and I see with blockchain and crypto and all these new technologies a possibility of bringing back people in the economy chain and to participate on the wealth of this world. Yeah, and also to create their own fundament with hard work, to have a better life maybe as they have at the moment.
The other thing that you could do with that bundle of rights that you have against the property is allow, for example, token holders to spend a night there. And there are a number of other rights that you may be able to associate with it. And this is the difference, is that tokenization allows you to have a greater emotional connection with that asset than you would if you were just a simple investor putting in buy and sell orders through an exchange that only operates for 5 days a week, 9 to 5, or whatever the exchange hours are. That kind of emotional connection is something that I guess people are seeking, is what you're hearing from your clients, and certainly what I'm hearing from mine. And they're asking me, could we structure this? Could we also throw in this? So when I was looking at that music problem that I referenced earlier, we were thinking of what are other types of assets in that music industry that we may be able to bundle together in that NFT, not just the song rights, but maybe something else, lyrics that open up to whoever sees them, original lyrics, or a costume. So we were looking at, for example, a fashion designer in Spain who does a lot of fashion for Spain's equivalent of Lady Gaga, so someone who basically has very outrageous fashion, changes it multiple times on stage. And so holders of that NFT would be able to receive a digitized version of, let's say, that outfit that they could then have it portable into gaming environments and move it from one to another. That then gives them the ability to have ownership of that in a virtual world in which they spend a lot of time in. The same thing could be with that property. You have a small, ownership right or investment in an NFT that represents, I guess, some bundle of rights in a property. So it's very difficult to be a lawyer and get to the point very quickly, but I have to choose my words carefully. So
actually, this was
very precise.
This was my joke, yeah.
But that emotional attachment can actually continue on in virtual spaces. So everyone's been talking about metaverses and how we're going to build these and how we're going to interact in them, et cetera, et cetera. You might be able to take that bundle of rights that you own and be able to live in a representation of that house in, Sandbox or whatever kind of virtual environment you like, and then maybe move it into Fortnite or well, maybe not the house, but you know what I mean? Like you'd be able to move digital assets from one environment into another. And that emotional connection is really an advantage that you don't have.
Yeah, I would have here one question to Berwin. In your project, as much I know, you tokenize also real estate, most likely hotels, when I remember correctly. And
Yes.
and how is this personal connectivity of your investors to your project? Do they had vacation there and they say, "Oh wow, that's so cool! I want to be part of it," or how do you see this connection?
Yes. So our community is really passionate about real estate. Most of our followers in our community have invested in our token or are as part of a community because they want to be part of like the transactions of all the properties we're tokenizing. We're attacking the space in a different way. So how we're talking about the representation of the ownership rights of this real world assets as a digital token on the blockchain. What we're doing in Entire Land, which is the engine, is for Ecto Real Estate, is basically what we do is we fractionalize the real estate management rights. People in Web2 understand this much easier, and also we're not a security because of that. What happens is, what I do is I explain to a Web2 or traditional real estate owner, imagine you owning a property and you have a property management company, and from there it's attached to, let's say, an online travel agency. The customer pays for your night's stay in your place, and then you receive the earnings, and the property manager needs to pay for expenses before giving you the earnings. Now imagine yourself in 1,000 pieces, and so the property management company pays you in 1,000 fractions, and now attach that to a fractional real estate marketplace and a launch pad, and all of a sudden we solve so many problems. The real estate developer all of a sudden can raise funds without using the bank in a matter of minutes. The fractional owner can purchase a fraction of, have a portfolio of properties globally throughout various industry sectors. We're not only fractionalizing hotels and holiday homes here. We can fractionalize parking spaces. We can fractionalize logistics, residential, commercial, industrial properties here, as long as they're, generating good yield from the property manager. So the way we're doing it is through property management, but in a way it's locked. The property's locked in a custodian, and there's a DAO component here that manages the property, and so our community is really happy about this. Everyone's really excited about this, and our strategy is not just to deal with the Web3 community here. I'm actually flying to every country literally every week to onboard Web2 people, because these, without mass adoption and having the other 8 billion population jump into this space, we're never going to get anywhere with this tokenization of real world assets.
My gratitude to the panel for such an insightful conversation. Thank you so much. This question is across the panel. What is your advice to a startup that wants to endeavor to establish a medium to fractionalize real estate and other assets, and to contribute to this revolution? What are some good examples that you've seen that we could follow suit and learn from? And trade secrets are welcome.
Let me jump in on. One of the key issues I think is going to be regulatory compliance, and the world is pivoting very quickly towards the fact that any of these investment products are going to be regulated. That's my very strong view. I see a clear trend across the world. The challenge with that for a startup is the moat, the barrier to entry that the regulator, the regulations, the capital lockups, the licensing fees, the 9 to 12 months of filling out forms and building thousands of pages of policies. I know this because we've just gone through this ourselves. So it's a very significant barrier to entry. my recommendation would be to seek out regulated partners to leapfrog you over that moat, and to then focus really on what you're actually trying to do, which is probably a new and different creative financial structure, where you're going to be offering something different to investors and indeed to those who are the asset owners. So my advice would be to look for ways of leapfrogging over that moat by partnering with regulated players.
So one of the things related to the trust and the law firm and all the legal stuff is how I can convince people that I am fully regulated and fully legal, and whatever they buy from me in real estate or whatever, okay, that this token or this NFT is present a real asset, is number one. Number two, how the government can accept me in this way, because for example, last few weeks actually I was searching for a law firm to advise me about the regulations all over the world about the project in Dubai, and everyone is giving me, okay, you need to have 2-3 licenses from different countries. One person told me, okay, we can do it in a gray area. Then later on, you can find a way to.
Don't believe
Very
him.
good lawyer. Yeah.
Don't
Very
believe
good
him.
lawyer.
Then I find TOKO actually. then I found TOKO, and I read about it. Then I find the event here. So is VARA currently have a real regulation, fully regulation that can protect me as, let's say, a developer, real estate developer? Can it protect my investor? Can it give the guaranteed for all the parties and everyone is 100% protected and they can invest in this project without any fear of any legal...
I mean, Peter, you'll have a view on this, but I think my first comment would be, doing it in a compliant and regulated way does not ensure success of an underlying project, and this is one of the key things. So we get a lot of approaches from people wanting to use us to tokenize their assets, maybe to use the associated law firm to help with the legal structuring, and we have to be very careful that people are trying to use a veneer of credibility and regulation to make a bad project look good. Tokenization will not make a bad project look good. What it can do is make a good project great, and so that is important. But maybe Peter, you've got some observations on the legal points.
I do. I mean, it's a very wide sweeping question. If you could get a blessing for a project that covers every angle, and I don't think you would have a clean legal opinion on that from any law firm. And that's because it's multifaceted. VARA regulates only very specific activities in Dubai. And there are overlaps with the Securities and Commodities Authority in Abu Dhabi. There are overlaps with the central bank. And there could potentially be overlaps in other markets as well if you're seeking investors or participants outside of the Emirate of Dubai and outside the DIFC, because VARA doesn't actually apply here in the DIFC. So when you are looking to get regulated, you really need to find specific advice for what it is that you're trying to solve for, and then find a lawyer that would be able to do that. But law is jurisdiction specific. So if you're getting advice on someone, from someone who could give you advice on VARA and say the regulations here in the UAE, unless they're licensed to do so, they wouldn't be able to give you the advice on how to penetrate the European market. And there may be inconsistencies with how you structure here versus how you structure in another market. So, and I suppose at some stage, regulators around the world will be using best practices in this new asset space to learn, how do we regulate this space? And there could be greater consistency, or there could be blocks of consistencies where passporting would exist. So this is how it often works, for example, in capital markets, where if you have a bond document that is accepted in one jurisdiction, you can passport it very easily into another one. but we're not there yet. And so I suppose what you'd be looking for is a law firm with global reach, with partners in different jurisdictions that practice in this area that would be able to give you a comprehensive view. And again, it's very difficult to find a law firm that can do that in every jurisdiction in which you want to operate. A lot of the major law firms, for example, don't operate in the offshore sector. So very few of the major firms have lawyers that advise on the laws of Seychelles, BVI, Cayman Islands, which are very popular issuer jurisdictions, or were certainly Cayman Islands and BVI, when they introduced the VASP regulations similar to VARA, that moved the issuers into another jurisdiction. So it's a very complicated space, but happy to have a chat afterwards if you like.
Filippo, you want to say something?
Yeah, if I can give you a pragmatic piece of advice. Of course, the legal side is very important, regulatory is very important. But being a native crypto company, we see the companies out there, like probably your project you're starting. Transparency is the most important thing. So you want to have a website, you want to show that you're regulated, you want to be present on a public registry that the regulator publishes, probably VARA, for example, as a public registry, and you have to be very transparent on how the company operates. I'll give you an example. I started providing consulting for crypto in 2014. Back then there was a website, there was no company name, never ever, simply because people were operating in an unregulated environment, so they didn't want anyone else to know through which entity you operate and how you operate. So transparency is key. I've recently seen a very interesting project that is tokenizing short-dated T-bills. And I would have expected this project to operate from a shady jurisdiction in a non-regulated way. In fact, they operate this project through a regulated fund in BVI with a custodian in Cayman and a fund manager in Singapore. How do I know this? They published everything on their website. So I think transparency is the most important thing that you can have right now when going out there and promoting your project.
You know, a lot of people in the crypto industry are talking about what's the next narrative, right? You've had the 2017 hype cycle, it was ICOs, right? And then arguably there's been a lot of rug pulls and hype cycle and I don't know, sour taste in everybody's mouth, when in the last cycle you had PFP projects, NFTs that rug pulled everybody, right? And I think it's really encouraging that talking today about real world assets, because I think that potentially this could be another hype cycle. And I'm not saying this is a positive thing, because as far as I understand, we've had a very regulatory and legal loaded panel, and it's great to get their insights. And as far as I can see, we are in a position where we are talking about the benefits of crypto, blockchain, and the Web3 industry as if it is going to stay the same way as we know it today, with DeFi, with self-custody, etc. Yet we are in a position where we see that the tides are turning, regulators are catching up, and there will be a regulatory-friendly path that, as far as I see, will be restricted to the normal folk, the people that we see currently as a retail engaged player in the space. And we're going to have a non-regulated path where we're going to probably see developers, etc., that will try to crowdfund through tokenized real estate, fractionalized NFTs, and will fail to the most part. So the question is, am I right that the space will, the regulatory compliance will not happen in the immediate future, and we will still be prone to having the same boom and bust cycles as we had before?
Very quick, we are going to see regulation of real-world assets in tokenized form in much the same way as we have with TradFi, and I don't think we will see regulators that sleep at the wheel in those asset classes because they're familiar with them. I think the game is up for unregulated activities across the world, and as I said earlier, I think all tokenized assets are heading towards a degree of regulation. That's happening, I think, constructively in places like Dubai with VARA. It's happening destructively in the US with scorched earth approach to regulation by enforcement from the SEC. But all of those are making it very clear all of these tokenized assets are going to be regulated.